A week or two ago, I noted that at some point we were probably going to enter a difficult phase for commodities. I said at the time that I wasn't trying to pick a top. I probably should have tried to pick a top at that point. I think that may have started. I was kind of thinking that oil might make it to 91 or maybe even to $100 before starting that sideways churn. But that big, I think it was about 13% crash in oil on Friday has kind of convinced me that we're probably ready to start that long sideways grinding. Basically, it just means that the baby bull phase is over. And now we're going to enter the middle stage of a bull market where the market climbs a wall of worry. The gains are much harder to come by. And in reality, as I've been saying, we really stretched the rubber band far to the downside in 2020 when oil went negative. I think it was briefly negative $35. People were paying someone else to take their oil. If that's not the bell ringing that a secular bear market is over, then I don't know what could possibly be a better signal than that. We stretched the rubber band about as far to the downside as I have ever seen, and maybe as far as it's possible to stretch. And so that's going to trigger a very powerful reactionary move, which it did. Commodities and the CRB and oil in particular have gone just gangbusters over the last year and a half during this baby bull move. Just a huge, powerful move. Easy, a lot of money and easy money to be made in commodities. Over 100% in the last year and a half in the CRB of all things. I'm not talking about one single commodity. I'm talking about the entire commodity sector. Over 100% in a year and a half. That is mind-boggling gains. But as I've been saying, there was going to come a time where we were going to have to slow down. And as I've said before, after easy periods in the market come difficult periods. And I'm now convinced that we're probably starting that difficult period. It's hard to see it on this chart right here, but there's a faint little dot right here. That is that big drop on Friday. I haven't drawn the trend line in, but I think that drop may have broken this long-term trend line. So I'm going to say we're probably starting a period of months, maybe a lot of months of sideways churning or corrective downward move before we can get the next leg up in commodities. And I don't think this is by any means the end of what I believe is a secular long-term bull market that began right here. I just think that we've gone up a lot very quickly, and we're going to need a period of cooling off and digesting before the market is going to be ready for another leg up. All right, I'll convert this over to the weekly chart. You can kind of see that drop now on the chart here. You can see we've come quite a ways above the 200-week moving average. We finally recovered that, which is also a sign that we're starting a secular bull market. And we're probably just going to need to go sideways, maybe even as much as halfway through 22 before, or to give this 200-week moving average some time to start turning up and to catch up a little bit to price. And then I think we start the wall of worry phase of the bull market, where gains are much slower, and that phase lasts for many years before you get that final bubble phase. All right, so what I think is going to happen, I think we're probably starting the final melt-up phase in the stock market the bull market in stocks. I think we're starting that final bubble phase. And so we've had or we are getting our correction down into a daily cycle low. The intermediate cycle is still young, so this correction should be over, maybe even ended on Friday, but if not Friday, I think Monday or Tuesday, the correction will end, and then we'll start back up again. And if the NASDAQ especially just comes roaring out of this daily cycle low and slices back through 16,000, and I think what's going to happen is that it's going to become kind of difficult to make money in commodities. They're going to be stagnant and kind of going sideways, maybe chopping lower. And so more and more capital and liquidity is going to start focusing where it's easy to make money, where the gains are coming easy. And so far, and you can see even over the last year and a half, that has been in stocks and especially in tech after this slingshot move down. So that would be the firepower to really power that final melt-up phase. If commodities become difficult to make money and so liquidity starts to drain out of the commodity markets, it starts to focus in tech where the market just is continuing to just go up day after day. That would be the fundamental driver to complete that final melt-up. And then once the bubble in stocks pops and collapses, and then everything reverses and it becomes hard to make money in stocks, then I think that liquidity will start to flow back into the undervalued commodity markets. But right now, I think we're setting up for some difficult trading in commodities, and that may start to focus more and more liquidity into stocks, which I think still need to complete that final bubble phase, that straight up phase. As I pointed out in the past, the NASDAQ stretched 60% above its 200-day moving average at that top in 2000. At the recent top right here, this is a weekly 200-week moving average, so not the same thing. But let me convert the chart to daily. All right, here's the daily chart. So you can see at this top, price had gotten stretched a bit above that 200-day moving average, but not 60% above the 200-day moving average. And we're talking, somewhere above $20,000, and doing it very quickly before we get to that same kind of insane price increase that we saw at that top in 2000. And I'm not seeing, all my neighbors bragging about how much money they're making day trading the stock market yet. So that's another component that's not, I don't think is really here yet. We haven't got the entire general public on board with the free money mantra that usually happens at the top of a bubble. So I think we probably still got, maybe in time-wise, we don't have that long to go, maybe only 2 to 4 months, but price-wise, I think we've got to have a huge price increase in the NASDAQ before we complete our bubble. And then once that's done, like I said, then I think liquidity starts to flow into the commodity markets. And then we get the next 5 to 8 years of a secular bull market in commodities.